Hello, everyone. It's Lisa Patterson with Daniel Ravenel Sotheby's International Realty in beautiful historic Charleston, South Carolina. And I have Kara from United Community Bank with me today. Hey, Kara, how's it going?
Hey Lisa, good. How are you?
Good. I'm glad you're going to be on with me today. And congratulations. I have seen you some, but Kara just got married. So that's exciting. Uh,
Thank you.
yeah, you're still on your honeymoon, actually.
I know it doesn't feel like it, but technically yes.
So congratulations on that. So Kara and I decided to do this kind of a last minute thing because something happened the other night. And when I got the text message and I had already received a phone call, kind of the same thing. And I'm like, oh, I'm just getting in touch with my handy dandy lender, Kara, that it knows all. And she's amazing. And before I go into this, I'm just going to give you a plug about something. Everyone that follows me knows I've just finished restoring my 38th historic property. I've lived in all of them. I've had mortgages on all of them, not counting investment properties I've done. And this house that I'm in now, Kara helped me with my mortgage. And I can truly say, I sent her boss an email because I can truly say, and I deal with lenders all day long, that was the easiest lending process I have ever gone through in my life. So I really appreciate that. And so anybody asks me now, I'm like, if you want somebody that's on top of stuff and it's going to be easy, call Kara. Um,
Oh,
but what
thank you.
happened the other night was I received a phone call and then I got a text message and it's like, oh my gosh, interest rates dropped below 6% today. And I'm like, well, I didn't hear that. So I immediately sent Kara the information that I received, and she just started texting me right away what was going on. So what happened with that? Tell them what was going on.
I mean, Lisa, it's just marketing at its best. You know, when Lisa came to me and was like, "Hey, I heard that rates went below 6." I'm like, "Oh, I haven't seen that." But it's kind of the perspective. Rates are they vary based on what you're looking for. Are you looking for a government backed loan like FHA, VA? Are you looking for a primary residence mortgage? Are you looking for second home investment condo? Is your credit score 800 or is it 600? Rates are going to vary. But I asked Lisa, I was like, Lisa, send me what you're seeing that says that rates are below 6% because I have not seen that without a huge buy down. And so she sent me the little snippet. And sure enough, it has that all the rates for these different programs are below 6%, but they also have over a 1 point buy down in rate for getting a rate below 6%. So, and that's fine. I just think that it sometimes can be a little misleading when lenders post something that says the rates are X when it really varies based on a bunch of different factors, like I just discussed. And on top of that, if you have a buy down in rate and that's not something that a borrower is aware about and it's not priced at break even, where you're not going to have to bring extra money to closing, I think that that's something that should be discussed. But always see that it's like a 1 point buy down in the small print, and it could be thousands of dollars that you would have to bring to closing in order to get that rate below 6%.
It's very confusing for the consumer, for the general public, because even if people, and you see this all the time, as I do in our business, even for the seasoned buyer that's bought several houses, they don't do this every single day. So
Right.
we don't remember what they went through the last time they purchased or sold. So it's a learning, and things change too. So it's a learning process for them every time they do it.
Yes,
Um,
absolutely. And I'm not to hate on any type of buy downs. And just so everybody knows, buy downs are synonymous with origination, with points. It basically means that you are front loading the interest rate. You are paying upfront for a lower interest rate. And sometimes that makes sense based on the time frame that you're going to be in that house. And you are going to see a benefit after the break even point of buying down the rate and you getting to X amount of months or years at that point. But sometimes it doesn't make sense. Sometimes your time frame from that house could be a year from now, or if rates are expected to go down in the latter half of this year and you're planning on refinancing, then it does not make sense to pay a ton of money up front for a lower rate when you're just going to refinance. In that case, you're going to lose money. And I think that that's very misleading and very important for everybody that is looking at the disclosures and the estimates to just go through line by line, ask the questions. What does
Well, we're just going to take a few more minutes, but the topic on everyone's mind, and I keep hearing, is, oh, it's going to get better. You know, price, they all think real estate's going to, you know, bottom's going to drop out. They're listening to national chatter, as I call it. And someone told me yesterday, I've been saying that so much. They said, Lisa, you should tag along that. National chatter doesn't matter. I mean, it's all about local. You know, it's about what's going on in your local market. But, you know, let's just close out with this. Interest rates now are about what they were 5 or 6 years ago, right?
Correct.
I don't think, I may be wrong, and stranger things have happened. I don't think we're going to see those crazy interest rates that we were seeing the last couple of years. Do you? You're in the business. You're watching it. You think that's going to happen?
I mean, when you're looking at the rates now, everybody is saying, oh my gosh, they're so high. But Lisa, you're right. You know, 5 or 6 years ago, this is where rates were. And when you're coming from historical, all-time, never before seen lows, of course, anything higher than that is going astronomical. So I think that it's just really important to keep in mind that, you know, for your family, when you are just evaluating monthly payment, your time frame, rate, where you're going forward, the investment into your own family as a business, whether the rates are 3 or they are 6, you know, you got to make the best decision for you. And people were buying at 6% 5 or 6 years ago. People were buying at 18% back in the 80s. You know,
Well,
and
my
those,
first house was at 18%.
yes,
I had a lot of double-digit houses.
yeah, I remember my parents, they got 12% on their house and they were robbing the bank. So, you know, but those people are still well off now. They've built up equity in their homes. Now they're now able to take advantage and roll that over into another house, or they're able to retire on it. And so no matter what the rates are or where they're going to be, because nobody knows, all the chatter that's out there, you know, nobody really knows. Nobody knew that COVID was going to become such a thing either. You know, we're just in uncharted territory, but I think it's just really important to keep in mind that you are making an investment in your family. And if this is a good move for you to make a house, then yes, you should purchase, whether it's 3, 6, 10, as long as you can afford it. And then in the long run, it should benefit your family as long as you're making good decisions.
Yeah. And I'm telling my clients too, if they, and I have a lot of cash buyers, but if they have to get a mortgage or want to get a mortgage, because rates to me, I think are still low. I mean, compared on history of what I've purchased in the past. And as you
Yeah.
said, what, you know, everybody was buying then, you're not married to that rate. If
No.
something happens and they go very low, refinance. A lot of people did that during
Yeah.
COVID. They refinanced. Y'all were overrun with just as many refinances as you were people purchasing, from what I was understanding.
Yes, we had a ton of people that are refinancing, not anymore because rates are a little bit higher, but you know, the people that are still purchasing now, there's nothing holding you back from refinancing in the future. And ask anybody, ask your parents, ask people from work. People are refinancing left and right. I know within the last 5 years, I've refinanced twice personally. I do this every day, but you know, people do that. There's a time and a place, and sometimes, you know, that there's nothing keeping you from being able to change the terms of your mortgage. You're able to still do that. And what is happening now is nowhere near what it was like in '08.
No.
So I think that people also have that hesitancy that they're like, oh, deja vu, we're in a bubble. It's not like that. Things are very, very different. So I don't think that rate should be the main factor in holding someone back from purchasing.
Yes, I just posted something on my Instagram account, and anyone can go and look at it yesterday or last night about that. This is definitely not the market we were in 2008. The economy is totally different. It's not the same reasons. We don't have the, you know, people losing their homes. The
Yeah.
jobs are more stable. It's just a whole lot of things that factor into this. So we are definitely not into that, where that's going on. And you know, people coming to Charleston looking for a deal. I'm like, that was 25 years ago. You see what people are paying for houses, you know, and the low inventory. So there's not a deal. And the other thing, you know, I remind people, you know, people go buy cars all the time and they have car payments, and those rates are higher than interest on a home. And some people have credit cards with higher rates. So you're paying those higher rates on that. At least when you purchase a home, that is tax deductible, that mortgage interest you're paying. So they need to look at that. But Kara, thanks so much for being with me today and putting some, shedding some light on this, because everybody's wondering about what's going on. And I really appreciate it. And I hope to see you really soon.
Happy to assist. Have a good rest of your weekend.
Okay. And if anyone ever needs any questions about any of this, feel free to give me a call, and I'll have Kara's information at the end of the video, and you can give her a call as well. So thanks, everyone, and see you soon.